Great to have you back. Well, we still have with us Dr. Moses Tule, Director, Monetary Policy Department of the Central Bank of Nigeria in our Abuja studio. Many thanks, Dr. Tule, for staying with us. So we're talking about the policy direction, really, of the MPC for 2019. Is it to attract foreign investment or more of encouraging local production?
Thank you very much for that question. As I was saying, the goal of every central bank is to achieve price stability. But no central bank takes a journey on its own. It has to have in perspective the economic policies of the government that's in power. Irrespective of the government, the central bank must work with the economic policies of that government to ensure that it delivers a regime of price stability and economic growth. For the Central Bank of Nigeria, we have redefined that focus to be price stability conducive to growth. And as you can see, the antecedents of the bank in the past, where we have had to intervene in non-core or non-mandate areas under the development policy provisions in the Banks Act, the Central Bank would continue to ensure that it delivers price stability with an eye on growth. What do I mean with an eye on growth? In the past, we have established entrepreneurship development centers to help generate the skills that are needed in the economy for employment, for easy absorption in the employment generation sectors or growth stimulating sectors of the economy. The bank would continue to do that. We have intervened in the educational sector by establishing the centers of excellence across the country in 6 universities in the country. The bank would ensure that these centers become operational. The bank is working on a framework that we are developing modular courses for employment generation so that people can be trained. There are television-based courses that kind of teach yourself courses. Now, they will be hosted on the web. People can have access to it, be trained in almost 120 areas of specialty, and they can just pick up loans which are readily available. The bank is working with the Bankers Committee and has already and NISA has established the National Microfinance Bank, which will make loans available to graduates of these programs. Once they go through these programs that will be hosted on the web and they get trained, they're designed so that young people who are unemployed can easily follow and get certification, become highly qualified, have access to loans, and set up small-scale businesses and enterprises. So we are not just looking at price stability. We are looking at delivering price stability and also ensuring that we remove from the streets the army of unemployed youth that are there constantly so that the economy would grow. I think that's the focus of monetary policy going forward.
Okay, Dr. Tule, some real questions, and I'm going to ask you, I did read the communique out by the Central Bank of Nigeria as regards monetary policy. They were saying 13.5%. A lot of people argue in some quarters by saying 13.5%. Why can't we ensure like a single-digit interest rate in this country? A lot of people will say that the CBN has been too conservative as regards this monetary policy, and it just keeps hovering around from 14, it's now 13.5%, that we should stimulate the economy. And I also ask you questions along the line of things you're doing, to bring about liquidity in the economy, things like your open market operation, your OMO operation, and some other mechanisms you're using like that. But a lot of people are saying, hey, it's just still too conservative what you're doing right about now, and it's almost not sustainable.
Thank you very much. I'm sure that if you get to the battlefield, you're not going to tell the general in the battlefield that he does not know where he's leading his troops. Well, this is not the battlefield. This is a field of macroeconomic management. You, that is the analyst, does not have all the parameters that the central bank is using to make decisions. And let me also add very quickly that you do not control, the Central Bank of Nigeria does not have control over interest rate. The interest rate in this country is market determined. And the market determination of interest rate is dependent on the fundamentals of the economy. There is what is called in monetary policy or macroeconomics, the impossible trinity or the macroeconomic trinity. A central bank cannot control inflation, control the exchange rate, and at the same time control the interest rate. It must let one of them go. For the Central Bank of Nigeria, our focus is on inflation and the administration of the exchange rate within what the market permits it to be. So the central bank, no central bank can have control over the three aggregates. To that extent, interest rates in Nigeria are market determined. But as infrastructure improves and the general state of the economy improves, interest rate trend downwards. Just at the point that the MPC adjusted the interest rate by 50 basis points to 13.5, interest rates in the economy were already generally trending downwards. And the central bank has kept a very close eye on these developments. And we would continue to monitor them as they unfold based on the fundamentals of the economy. But the central bank cannot dictate an interest rate for the economy. That is not possible. I give an example. The Kenyan Parliament in 2017 passed a law limiting interest rate. That law has been reversed because it was operated in a breach. It couldn't be hosted on a modern economy. So what we are doing is try to stimulate growth, try to stimulate the economy, and as the economy grows, naturally interest rate will trend downwards. And as infrastructure in the economy improves, its interest rate will trend downwards. Now, talking about liquidity in the system, there is sufficient liquidity in this system. In fact, there's more than sufficient liquidity for the absorptive capacity of the economy. And that is the task of the central bank. To deliver price stability, the central bank must look at the liquidity level that is consistent with non-inflationary growth in the economy.
The Central Bank of Nigeria's governor, Godwin Emefiele, got reappointment for another 5-year term, the first we have seen since 1999. Congratulations to him again. But, one of the first questions he was asked during his screening was that about the foreign exchange policy, the exchange rate policy. And he gave, a response that has been controversial. He said, there are no multiple exchanges, but multiple windows. A lot of people have been reacting to that. What is the direction of Governor Emefiele in this next 5 years as regards exchange rate policy?
Thank you very much. The governor has enunciated his vision and has consistently discussed this and has made his policy options available in the public domain, and which is to deliver a regime of stable exchange rates in the country. But let me add that the central bank cannot deliver a regime of stable exchange rate if Nigerian entrepreneurs and economic agents do not produce and export and earn foreign exchange. A country's exchange rate is only stable to the extent of the volume of exports to other countries and the earnings it gets from diversified export basket. If the country relies solely on the export of oil, anytime there are shocks in the oil market, it affects the flow of exports earnings into the treasury and into external reserves. And then, if that shock is a negative shock, that is, for instance, if oil prices begin to drop, then it affects the build-up in external reserves, which means we have to go back to the savings, take out of the reserves to service the economy. In that way, you can't deliver a regime of stable exchange rate because there will then be pressure on the exchange rate and it will begin to depreciate. But if going forward, Nigerians take it as a responsibility to produce for export, there's a huge export market here in West Africa and on the African continent and even outside. If Nigerian entrepreneurs take advantage of that and produce and export their goods and repatriate the export earnings, then that would ease pressure on the foreign exchange market because the market would then have a steady supply of foreign exchange and the exchange rate will be stable over time. The central bank cannot administer a regime of stable exchange rate sitting in the central bank when economic agents fold their hands and wait for the central bank to deliver foreign exchange to the market. And I think this is very important. We need to know that, please.
Okay, so Dr. Tule, concerning what you're saying, the central bank cannot, engineer this process, but they can facilitate and create an enabling environment for this process. And I'll give you instances. We have seen some of the incursions of the central bank as regards, enhancing the productivity of these agents of the economy. But some watchers will say, you haven't done enough as regards that. And how can you show up this even more? Because entrepreneurs, take for instance what you did with Uncle Barrow's scheme, want more leeway, want more capital to be able to trade and export and have that symbiotic relationship with this economy and the other economy. But they said you've done something, but you've not done enough as regards this.
Thank you very much. I want us to take us to the drawing board. There are mandate issues here. The central bank has a mandate for monetary policy. That's the mandate of the central bank. The mandate of the central bank is not for the industrialization of the economy, but the central bank must work to ensure that an enabling environment for the industrialization of the economy emerges. Within that framework, that is what the central bank ought to do, and that is what the central bank is doing. There are agencies of government saddled with responsibility for ensuring that economic agents have unfettered access to certain services or to certain infrastructure that would enable them improve on their output for exports. So if you take all those responsibilities and host them on the central bank, then you need to give the central bank an expanded mandate. Then two, these agencies of government on an annual basis receive budgetary provisions to promote their activities and ensure that they deliver this service to the generality of the economy. So again, you as part of the press should hold other agencies of government responsible for delivering services for which taxpayers are making resources available to them to deliver. The central bank has veered out to do some of the issues that are not strictly within the ambit of monetary policy. And I think the bank should be commended for doing that. Like the issue you are raising, we would continue to work assiduously with all agencies of government to ensure that that environment which you have spoken about emerges. And that's what we are doing. I think we would continue to do that.
Okay, I just want to take you on this real quickly. Regulatory framework for digital money policy. What do I mean? Fintechs, for instance. The bar is still set too high. If you're a small business owner, you still need about 100 or close to $1 billion naira to be able to get your regulation to be able to own sort of like a small fintech company. You still have that. The bar is still set too high. And it goes back to the question I raised earlier on about inclusion and the central bank facilitating this. Because if you're facilitating this and you're still keeping the agents of the economy out of the business space with having, fintech entry points about 1 billion, then there's a problem. And that will also stifle liquidity. So what is the central bank doing as regards this?
Yeah, I want us to take it this way. The entire issues around digital money is an evolving phenomenon. We haven't seen the last of digital money yet. And I'm not sure anybody would rightly judge the reactions of any central bank to the digital money phenomenon, whether that central bank is doing well or is not doing well yet, because the entire thing is an evolving phenomenon. Globally, central banks are not yet in a hurry to recognize digital money. Some of them have recognized digital money. There are aspects of digital money that every central bank has already entrenched and has recognized. But issues like digital currencies like Bitcoin and the entire gamut of them are an evolving phenomenon, and legislation hasn't completely evolved around them yet. Even the Basel Committee on Banking Supervision is grappling with these issues because it's a dynamic field, and on a daily basis, these issues are emerging. For us at the Central Bank of Nigeria, the issues are still being considered. We are working on a framework, working on a regulatory framework that would take into account all issues around digital money. And I think it is something that has to stay, and we must not be in a hurry to ensure that we jump and get into that space without doing a thorough job around understanding, recognition, and the regulations around it. Thank you.
Well, many thanks, Dr. Tule, Director, Monetary Policy, Central Bank of Nigeria, for coming on the morning show on Arise TV. We do appreciate you. Thank you so much.
Thank you.
Thank you so much. Thank you. It's a pleasure.
Well, it's now time for a short break on the morning show. When we return, we will speak to Dr. Andrew Nevin, Advisory Partner, PricewaterhouseCoopers. Stay with us. We'll be right back.